In this video, we are going to talk about AMC, and this is the daily chart. And the stock is down once again despite a promising announcement in that AMC is looking to renegotiate some of its debt load and extend near-term maturities. Now, this is again the daily chart. You can see price has been range bound ever since we had almost a full round trip from the gap higher, in which we saw not only the gap go higher, but price hit this weekly sellers level at $13, and that was a great opportunity to short the stock. How was that zone formed? Well, back in August, you had a drop in price, one basing candle, and then another drop out. So you had a leg in, basing candle, leg out, and that formed and left footprints of where the smart money was willing to short the stock once again. And on the rally that we had when Roaring Kitty came back on the scene, that was the catalyst that set the blaze on fire as sellers came in and dumped the price back. And since then, price has been just range bound for the past 2 months, or 4 weeks rather. Now let's get into some of the news regarding their debt repayment. So AMC Entertainment is a favorite of the meme stock investors and moviegoers, and for good reason. The theater chain's hundreds of locations have provided a nostalgic pastime for many, and the business does appear to be rebounding from pandemic lows. Unfortunately, though, AMC stock hasn't played ball despite a brief surge tied to the recent meme mania. Stocks have headed consistently lower, at least in recent weeks. Now, whenever a company is forced to renegotiate its debt with lenders, there's typically some structural pain beneath the surface. That's probably a contributing factor to today's decline in the stock, with investors likely repositioning their bets around AMC's ability to handle its current debt load. Now, estimates are that AMC currently holds around $4.5 billion in debt, with more than $2.8 billion coming due in 2 years. While the company did sell another $250 million in shares during the meme hype that we saw back in May, that's not going to make much of a dent in the overall debt picture playing out. Now, current estimates are that AMC has a little more than $600 million on its balance sheet. So unless the company is able to turn cash flow positive in a big way and quickly, there's the likelihood that it could be in trouble over the next few years. All right, so let's pull up the 4-hour chart. And again, this is a piece of what we saw in the daily chart. You had a false breakout to the upside back on June 6th, where you had a candle close above this box. However, sellers came in and pushed price back down. You almost had a breakout to the downside, but you did not get a candle close below the box. So, as indication of a sideways market is your 13 simple 4-hour moving chart target, moving average. I think eventually AMC drifts lower as you have buyers down at the $3 level. That's where we have this huge gap and go. So let me know what you think about AMC. Is it a dead business model? Are you still hyped on the company? Let me know what your thoughts are. Thanks for watching. Subscribe. Please like the video.